Hi, I'm Shingi Samudzi with SeedAfrika, and for today's African Minute, I'm going to talk about the impact of the Brexit on the African economy. So, in summary, there are three key categories of problems that we see from the Brexit. Number one is connectedness to the UK economy and to the pound. Number two is capital or private equity flight due to investor uncertainty. And number three is disruption of current bilateral trade agreements. Now, for the first problem, the connectedness to the UK economy, this is going to hit the South African economy the hardest due to the extent to which British lenders hold South African debt, which is up to 178% of South Africa's foreign currency reserves. The inevitable weakening of the pound will be very problematic for valuations, both for government debt as well as for bonds issued by businesses. The other big economies with strong UK ties, such as Egypt, Nigeria, and Kenya, will also be affected, but they have less exposure than South Africa does. The second big problem is the capital or private equity flight due to investor uncertainty. And this is particularly pronounced in both Nigeria and Kenya, which are more exposed to commodity fluctuations than, say, South Africa is. So we're seeing this as a result partly of both general uncertainty due to the Brexit. We're seeing this as a result of general global tightening of credit, and we're also seeing this as a result of uncertainty due to the US election. The third big problem is the disruption of current bilateral trade agreements, because these bilateral trade agreements that the UK had made under the umbrella of the EU will need to be renegotiated. Now, this is particularly poor timing for Nigeria, which is looking to stave off recession as commodity prices globally have been taking a hit for quite some time. Foreign investment there will also take a hit, as the UK has been Nigeria's largest foreign direct investment partner in 2015 and for the last 2 decades or so. Now, overall, in spite of the significant problems that we are seeing both from the financial fundamentals as well as from the long-term private equity confidence in the market, even though they are problematic right now, we can take assurance in the fact that the human capital and the fundamentals of the key growth markets such as energy, aquaculture, healthcare, and financial technology are still sound. So we expect to see an increase or return to previous rates of foreign direct investment in private equity as the UK's Brexit becomes negotiated and as we see a conclusion to the upcoming US presidential election cycle. Thanks. This has been Shingi Samudzi with the African Minute.